What's good, everybody? Since last week's episode of What We're Watching, I've added a couple followers, so I'm thinking this might be a worthwhile venture to continue, so here's another one. You're watching Zekkider, and this is What We're Watching for the week of November 16th to the 20th. So this week we're talking about a new trend in the domestic and international markets that demands attention, and that's the rise of Fintech and O2O, or online to offline services. Fintech refers to the crossover space between financial and technological services, whether it be retail, banking apps, money transfer apps, investing apps, crypto apps, or whatever the fuck. O2O specifically refers to a branch of Fintech in which the front end of a transaction is handled online, while the back end is handled in person. A good example of this is Starbucks' Siren Order, which lets you order your drinks from your phone, then pick them up at the location when you arrive. Another example of this is maybe Naver or Kakao Pay's banking systems, in which you simply deposit your desired amount of money into your account and use it whenever you see fit. See, in Korea, where card payment has been the norm for a good while now, the e-commerce market is introducing a new online paradigm of cashless transactions and seamless transitions between online and offline life. So, with that being said, a company that I want to talk about today is NHN Korea Cyber Payments. This is also referred to as NHN KCP, and I also want to talk about its parent company, NHN. That's because these two companies are standouts as Korea's largest cyber payment gateway and network operators. In the O2O space, the two largest players in this growing market currently are NHN's Payco and Naver's Smart Order. But given that Naver's Smart Order and NHN's Payco don't have their own stocks currently, and Naver's kind of taking a divide and conquer approach, NHN has really focused in on cloud-based operations since 2014, and they've taken up the space to a large degree ever since. Fintech has seen a really big bump since the coronavirus, and it doesn't seem like a trend that's going to reverse. So as Fintech becomes increasingly commonplace, we expect to see NHN KCP continue to grow as well, especially with its upcoming merger with MCPay, which is a company that they bought majority stakes of a few years ago, but now own in its entirety. MCPay is a company that makes devices and solutions for smartphone-based payment systems, and seeing how the trend is moving now towards cashless life, the completion of this merger will help cut inefficiencies within their business. One thing to note as the week goes on is that this decision to merge can be vetoed by their credit holders up until this coming Sunday, November 22nd. If it doesn't, then the plans will go forward and we might see an improvement to their business going forward. Now, for you numbers people, although the PE ratio was up in the 40s, NHN KCP has been growing in revenue, EPS, and dividend every year over the past 4 years, and they ballooned during the pandemic this year from about 19k per share in March to 67 at the beginning of this week. It may look expensive right now, but if you believe in the trend and you consider where this company can go with the cashless trend, this may be an attractive buy as vaccines are given out next spring and COVID becomes a thing of the past. Now, staying in the fintech sector, another stock to watch is EZwell. Easywell, formerly Easy Welfare, is an online platform providing online access to welfare-related services. They also focus on software development related to welfare projects, e-commerce, mental health care services, and travel tourism services, to name a few. This company received a lot of attention after their second quarter earnings of this year based on the resilience to the effects of the coronavirus, bolstered by positive growth in all categories, insider ownership, R&D scalability, and an incredibly low long-term debt-to-equity ratio, among other things. If you're the type to watch earnings, their best performances usually occur during the first quarter when benefits are received, and the fourth quarter when they expire, but amidst a pandemic, their profits remain steady for the second quarter of this year. How this will affect their performance in the third and fourth quarters we have yet to see, but it may not matter if Easywell manages to maintain their growth over the long term. On top of all this though, we at Zekkider stand a company that makes programs like welfare more accessible to those who need it. Alright, that's it for this week. Try to remember that these episodes are not meant to be treated as expert financial advice, but are meant instead to provide viewers with a better understanding of the less explored corners of our local stock market. If you found this helpful, please like this video and subscribe to the channel, and if you have any questions or suggestions for how we can improve the channel, feel free to drop a line in the comment section below. Otherwise, I'll see you next time.